Let's talk about how to get the highest return on a savings account and why that's important. Before we get into it, please like this video, subscribe to this channel, and hit that bell icon so that you can be notified every time we put a financial tip video out or every time we put any video out that's going to help you understand how money works so that you can make it work for you. First, let's do a quick review of how banks work. It's a very simple concept, actually. Banks take in your money that you put in a savings account or a CD or some other deposit account, and they pay you an interest rate. Then they loan that money out at a higher interest rate. So let's take a look at what the interest rates are today so you can get a real world feel for how a bank makes its money. Let's take a look at the Bank of America deposit interest rates on savings products. Now, I chose Bank of America randomly. However, you will see with all of the brick and mortar banking establishments, you're going to get pretty much no deviation or very little deviation in these interest rates. So standard pricing for $2,500 or less, or even $2,500 or over in your vanilla savings account is going to be 0.03% interest rate. That's how much you're going to get on your money. So if you put your money into an account paying 0.03%, what's going to happen is you're going to make a whopping 30 cents on a $1,000 deposit. So I just did $1,000 to make the math easy, but you can see, well, here you get 40 cents, 50. Let's look at the CD rates. Of course, CD stands for certificate of deposit. You're going to get a little bit more in terms of return from that because the bank has said, hey, we want to hold on to it for a little bit while longer. So you're going to have a defined time frame that money's going to be on deposit. But as you can see, the Bank of America rate is 0.8%. And 0.8%, if I had $1,000 on deposit, 0.8% would give me a return of $8.03 over the course of a year. Just keep in mind, inflation runs at 3% annually if we average it out over the decades. And it's important that you keep that figure, that 3% in mind, because money has a tendency to lose value if it can't at least match inflation. So here we're talking about savings products. They're very liquid. You can get your money at any time, and you're paying a little bit of a price for that. So let's look at the other part of this equation in terms of how the banks make money. Now, we've seen what they're paying you if you put your money into the bank. Now let's look at the other part of it. Here's how much they're charging clients who want to come in and get a new car loan. So you're going to pay 2.69%. And that's if you're a great customer with, you got good credit. Used, we are going to 3.09%. And here are the rates for lease buyouts and refinances. If we look on this page, which is the CD rates that Bank of America was going to pay us if we put our money in a 7-month CD, they were going to pay us 0.8%, which basically would amount to $1,008.03 at the end of the year. So our money would have made $8.03 at the end of the year. Not working very hard at all. We're not making much off of that at all. But we see that Bank of America is going to turn around and charge their best clients, their best retail clients, 2.69% on a new car. So that percentage rate works out to be a 2.61% difference, or the spread is 2.61%. This is how much percentage-wise the bank will make after they have given you your 0.8%. They will then make 2.61% off of that car loan. One of the questions on the table is, how do we get a better return from our savings vehicles? Now, savings are used for a specific purpose, that being the emergency fund. You want that emergency money, 6 months of expenses, in a liquid account. The reason for that is you want to be able to put your hands on that money and access it at a moment's notice for medical expenses, for vehicle expenses, or what have you. Remember, the emergency account is all about preventing you from tapping into accounts that are investment accounts, qualified retirement accounts, that money that's out there really working hard for you and may also have a penalty and tax implications if you access it before a certain age. The emergency account also prevents you from having to put expenses on high interest credit cards. So, what can we do to get better interest rates on the savings that we have in the emergency account? Remember, the emergency account, again, it's all about emergencies. This is not our investment money, but how do we make it work for us to some extent? All right, we can look at credit unions. Credit unions tend to have a higher interest rate on savings products. Here we have Navy Federal. They've got a 1% interest rate. Is it possible to get a little better than that? And the answer is yes. Here we see a comparison of Bank of America, Chase Bank, and something called Marcus. Now, Marcus represents a third category. We have the banks, we have the credit unions, and now we have the online banking sector. Now, one thing about a lot of these online banks is that they have no physical or a small footprint in terms of a physical presence, and that saves them a lot of money. So they're able to be extremely competitive with regard to the savings products. And as you can see here, Marcus, and it is backed up by Goldman Sachs, which is a well-known name in the banking industry, they are offering 1.70% on a savings product. So now, I am not endorsing Marcus. I'm not endorsing any of these banks. We don't have an affiliation with any of them. You need to shop around. There are many online banks, and you need to look at one that meets your needs, one that meets your needs in terms of online security, the savings rate that you want to get. And here we see an example of a great savings rate on an online bank, and whatever other features are important to you, like accessibility of your money. How long will it take to transfer that money into some other account that you might be using so that you can get cash? Or is there some type of ATM card that they offer that would allow you to access money at the ATM machine or use it as a debit card? So those are some things that you need to find out. Those are some things that you need to find out about whether or not online banking is for you. But that's the way that we can supercharge savings. We went from 0.03% in our first example to 1.70% in our last example, which is an online bank. Remember, start saving 6 months of expenses. That way you can insulate yourself from those things that come up in all of our lives that are just unforeseen, but end up usually costing us money. If you have any questions about this, let us know. You can give us a call, 443-379-4359. We'd love to answer your questions. Subscribe, share this with a friend, and like this video. Play to prosper. Talk to you soon.